Thank you guys for joining. As always, we're excited to kind of introduce you to this new risk managed SMA product suite that we have launched, specifically targeted for financial advisors and RIAs. Nice, easy way to start implementing digital assets right into your clients' portfolios. We have a wonderful presentation here and the portfolio team on here to kind of run through a background of Valkyrie for those who don't know us as well, get into kind of the product, where it could fit within your portfolio. And then we will leave some time at the end for questions. So feel free to use that Q&A box at the bottom of your screen as we go through. And with that, thank you again for being here. And I will pass it off to our portfolio team.
Sounds good. Thanks, Shannon. We're going to start off with Stephen. Why don't you go ahead and introduce Valkyrie a little bit, and we'll get started from there.
Great. Well, thanks everybody for joining. My name's Stephen McClurg. I'm the Chief Investment Officer for Valkyrie Investments. As you know, we've launched various products in the past, including ETFs. We were the first NASDAQ-traded Bitcoin futures ETF, as well as the first NASDAQ-traded Bitcoin miners ETF. We've actually had a lot of success in those two ETFs in the last few months in a very positive way. I'm going to move on over to our trust. We also, in early 2021, launched a series of grantor trusts that focus on things like Bitcoin and other protocols. We uniquely have trusts that are actually have the ability to stake. So for instance, our Polkadot trust is staked to the node. We run a master node for that particular trust and deliver the yield to holders of the trust, which is unique in the grantor trust ecosystem. And then we also have launched a hedge fund called the Opportunistic Fund, where we take advantage of opportunities in the market. Valkyrie's been around for almost 3 years now, and launching our first products about 2 years ago. And then finally, we have our risk managed SMAs that we recently launched. We noticed that financial advisors wanted something that wasn't just a full hedge passive Bitcoin and other cryptocurrencies, rather utilizing market risk to manage that risk. That's why it's called risk managed. We did pass $1 billion in AUM in Q1 of last year. The markets have been down since then, so we're not quite at $1 billion, but we're hopefully charging back up there over the course of this year. Some of the things that make Valkyrie unique is that we are digital asset specialists. We have members of our team that have traded crypto since, in some cases, 2013. So they're crypto native, which also comes with deep OPSEC and technical skills. And our team also has deep traditional asset expertise as well, coming from firms like Guggenheim and UBS and even the World Bank, just to name a few. We have deep expertise in risk management, as well as portfolio management and trading in traditional and crypto markets. We're active managers. That is a lot of who we are and a lot of our DNA, even though we do have a few products that are more passive in nature. And again, we already mentioned risk management focus, but everything we do starts with risk management before we even touch a trade. So we're looking at counterparty risks, for instance. We did not have any exposure to Celsius, Voyager, BlockFi, FTX, Alameda, Genesis. It's really sad that I have such a long list, but we had no exposure when any of those blew up. So we manage our counterparty risk, our compliance risk, our legal risk, and then of course the things that you think about traditionally in portfolios, such as market risk. Myself and Leah are both economists who are actively looking at the macroeconomic environment and base a lot of our trade decisions and our risk around what the macroeconomy is doing. And then we even drill down to actual risk of the cryptocurrencies that we trade. So digital assets, some of them do have inherent risk that we try to avoid. So we only have a limited universe of crypto that we trade due to looking at fundamental risk of those particular digital assets. And finally, I will give an overview of our current investment solutions and then pass it back over to Josh. The first three SMAs that we launched are, again, they're managed accounts with a risk management overlay, and that risk management is mostly market risk. But the first one is Bitcoin, where we buy and hold Bitcoin and hedge out some of that Bitcoin risk by moving into market neutral positions while we think that the macro risk is high. Then we have the Bitcoin Ethereum SMA, where we only trade Bitcoin and Ethereum in that trade. In addition to taking out market risk when we feel like the risk is high, there is also a historical correlation between Bitcoin and Ethereum that sometimes moves not in parallel. So depending on where the risks are in the crypto world, we might go more heavily in Bitcoin or more heavily in ETH, which Josh will explain more later. And then finally, our diversified digital assets SMA. This can hold any digital assets, but again, given our bottom-up review of various protocols, we have a limited universe that we'll purchase. And the way that we think about that is the same way that we think about fixed income, where you might have a portfolio of assets, but we analyze what the risk is of that particular blockchain. If there's heavy security risk, or there's not a lot of users or not a lot of developers that are building on it, we don't really see the long-term viability of those chains. So even if the markets fluctuate and they're highly volatile, if you're stuck with the token in a volatile market, you want to make sure that token is going to have staying power. And that's one of the things that we look at as we screen various cryptocurrencies to move to actually be utilized in our diversified digital assets SMA.
Great, thanks, Stephen. Let's go further down the rabbit hole here. Gonna have Bill talk about our team and why choose a Valkyrie SMA.
Yeah, so this, thanks everyone. I'm glad that you guys are all here learning about the SMAs. The Valkyrie SMA provides a pretty flexible investment vehicle for you guys to consider what risk appetite you want in digital assets. As Stephen mentioned with pretty efficiently, that our team focuses on what type of risk, mainly on credit risk and also counterparty risk. As you know, and as he went down the list of headlines over the past year, a lot of these types of risks involved pretty much go with the counterparty, right? What did they do? How can we avoid these kinds of things? What in terms of, we were a customer, what kind of signs did we see in terms of dealing with this counterparty in terms of an exchanger and a custodian? And you know what, in terms of what we look at as SMA, we look at these as Josh created on this chart here, we look at this stuff and why we prioritize our SMAs over other types of vehicles. Direct ownership obviously provides everyone with a tail, how can I say, some type of ownership that you guys feel comfortable with, not necessarily giving it up to an exchange and just, you don't know what's going on. You can ask us questions. We can look at it for you. We will always be responsible in terms of what happens to that. Risk managed, we are here 24 hours a day. Obviously, it says 24/7 trading. As many of you know, crypto does not go to sleep at night. We are very engaged with the markets. Unfortunately, probably throughout the night. I'm checking markets around 11 o'clock, 12 o'clock, and then also waking up, and that's the first thing we check. And we also have a process in terms of risk management overnight. The liquidity and all these three products are pretty healthy and efficient, much like traditional equity trading. So we pick these products mainly because of liquidity, to make sure if we need to enter, exit positions efficiently, we could do that. Custodians, we do a great job in terms of trying to see what custodians fits our products. Obviously, that's under regulation rule right now, but we are making sure that we're in touch with changes in the market and making sure that all our assets are safe as well as yours. Research driven, as we could probably see in another chart. We do, whether we like it all or not, we are on chats and real live discussions, for hours on end during the year. I mean, during the day. So that is not a problem in terms of us getting in touch with it. And obviously IRA eligible. That is why we're all here and trying to make sure that we have a product that fits everyone's needs. This is just a quick investment team presentation, and obviously Stephen and Sean and Josh and I are all here along with all our team, including Leah Wald, and including we also make sure that we involve our marketing team as well as our operations team to make sure that we're providing a mature digital asset process that many are comfortable with. As Stephen mentioned, I come personally from Guggenheim as well as Stephen, and Sean and Josh provide the deep crypto trading experience that they have. We have many discussions where they present situations or strategies that Stephen and I are not necessarily comfortable, and vice versa. We always, a traditional conversation would start, well, what if we did this? And we would come in and say, yeah, but the traditional world sees this. And what we do now, we bring in the operations team, which is more traditional focus, and we make sure that we provide products, we come up with products and strategies that check off all the list in terms of what we see as safe and compliant, and along with due diligent process. That is at our utmost importance in all our products that we do, and we strive ourselves being that mature company in the digital asset space. And finally, like I mentioned on the hours calls, the internal discussions are pretty diverse and provide a deep, how can I say, just a deep discussion in what can happen. We always are, while we can come up with products and strategies, we do make sure that they make sense in the near term, as well as we're looking out, 2 to 5 years from now already. And we're making sure that these kind of products are through these meetings that we have with our team, we're making sure that these products are there. Sean, I don't know if you wanted to say anything, and Josh, about the public media as well.
Yeah, I'll just add that we put out weekly research and insights, weekly video breakdown, which is maybe semi-unique to some of these other digital asset firms. We have macro commentary, thought leadership, just a variety of what's the pulse of the market, and we're always trying to get ahead of that. And I'll pass it over to Sean as we further discuss how the sausage is made here.
Thanks, Josh. And to build on what Bill and Josh just mentioned with our research undertakings, we want to give you an idea of our digital asset selection funnel here, which is how we arrive at which digital assets to include in our SMAs. For people new to the space, one of the more overwhelming obstacles to overcome is sifting through the over 10,000 investable blockchains and tokens to find value. Based on the core principles of blockchain technology, we can filter out a lot of the noise by analyzing the core principles like decentralization and security. Is the blockchain in question actually decentralized? Do specific entities control a large portion of tokens or nodes on the network? With the transparent nature of blockchain, we can analyze token and validator distribution as well as other data to confirm this. Scalability is obviously important in order to onboard as many users as possible to a particular chain as the network grows. We research to see how many developers are working on a given project and how active the developers are in maintaining and upgrading a particular protocol. Community is an important aspect as well, because at the end of the day, a network could be fast and have low fees, but if nobody uses it, there isn't much value. So as we continue to filter down, macro and research comes into play as we assess the appetite for risk and potential headwinds for the asset class. Fundamental analysis helps us zoom in to confirm actual usage. Some of the metrics we would use would be active addresses, transaction volume, supply distribution, hash rate, and more. And of course, technical analysis plays a big role in not only deciding which assets to invest in, but also when to enter, exit, and rebalance positions. So as we approach the bottom here, we are really only left with 5 to 10 blockchains that we are confident have the liquidity and meet our criteria for being investable. And just to give you an example, we can look at some of the characteristics of an actual blockchain that we invest in. Bitcoin stands out as the most established blockchain and the largest by market cap. We could talk to you about Bitcoin all day, so we're happy to discuss and answer questions at a later time or date. Real quick here, some of the more well-known characteristics are fixed supply of 21 million, immutable public ledger, and the open source and transparent nature of the network. Perhaps one of the most important characteristics is decentralization and being able to use Bitcoin in a trustless and permissionless manner. Somebody who lives in North America might be skeptical by saying their bank works just fine, the financial system is well established, and in some cases they'd be right. In some sense, you don't want decentralization until you actually need decentralization. So the most interesting and important trend for the adoption and utilization of Bitcoin comes from emerging markets. The situation in Ukraine comes to mind first. Obviously, being forced to flee your home or country is a scary situation, which can only be made scarier if you have to leave everything behind. However, we've seen examples of people being able to preserve a portion of their net worth in Bitcoin or in digital assets. In Nigeria, right now, there's been a big push for the use and the implementation of a central bank digital currency, and also major limitations on cash. So Bitcoin has become a lifeline for people and businesses there. In Turkey, with the recent earthquake, within a day, we saw millions worth of digital assets donated to the rescue and recovery efforts going on there. These are just a few examples of utility and adoption and the importance of Bitcoin, and one of the reasons it's a major focus for us at Valkyrie. So if we take a look at the blockchain schematic here, you can think of this as the anatomy of a blockchain. If we start at the bottom, we have a hardware layer, or sometimes referred to as a layer 0, which is made up of computers that serve as miners, nodes, validators. The hardware is obviously essential to any network that is connected via internet. Moving up to layer 1, we have the first layer of software that is crucial to any blockchain and the focus of our SMA products. We'll come back to this in just a couple of seconds after introducing layer 2 and 3. Layer 2 refers to a secondary protocol that is built on top of an existing blockchain. To keep it simple, the main goal of these protocols is often to solve scalability and usability issues faced by layer 1s. Layer 3 could also be referred to as the application layer. The main task of this layer is to host decentralized applications related to DeFi, exchanges, and NFTs. But circling back to layer 1, one of the reasons this is our focus for the SMAs is because it is the fundamental base network of a blockchain platform. Layer 2 and layer 3 cannot operate without it. And layer 1 executes and records all of the on-chain transaction, and therefore it acts as the source of truth for the entire network.
Great, thanks, Sean. So as we talk more about the tokens we select, and now I'm going to get into how we make those risk managed decisions. What does that process look like? It certainly starts at the top with Stephen and Bill. Stephen has the ultimate veto power as far as any decision making on rebalancing or allocations. And as early as late 2021, we were talking about the Fed and rates rising. We weren't the moon boy types who thought we were going to go to infinity forever, we started to de-risk and look at what that would mean for our products and our portfolios internally in the company. In October, in December, we started the risk off mode, obviously not knowing the geopolitical ramifications coming our way in February. But as this stuff came down the pipe, we were continuing to see rationale for additional risk off in any of our managed products. And again, we're very visible with sort of what we think, and we're always happy to share that in any platform. And we continue to be very hyper focused on what is the CPI, what is rates, what is our position relative to what we think those numbers, those economic data numbers will show us on a month-over-month basis. And on the crypto side of things, that's where Sean and I sort of come in. This is just a schematic, a representation of maybe how we would decide allocations in between, for example, the diversified SMA, or even between Bitcoin and Ethereum. On the fundamental side of things, for us, that just means what is happening on the chain? Is anybody using this thing? Is anybody developing on this thing, as Sean alluded to earlier? And by assigning sort of values to these on a week-over-week basis, we can kind of see in a broad way which chain may be leading another chain. And oftentimes we do see a pickup in on-chain activity or a pickup in the fundamentals preceding price. A lot of times it'll act hand in hand. But in this specific example, if we're looking at a slew of layer 1 tokens, we can see Matic, based on our system, certainly looking better than mini coins. This is an example from weeks ago, but you may not know that, just on the outside looking at it. You sort of have to dig into this data that's certainly freely available, but you sort of have to know what you're looking at, and that's where we come in. And then as far as the technical side, that's kind of how I grew into loving digital assets, is just because of the technical analysis and how deep that goes. And the first question I think the TradFi folks ask is, can you apply technical analysis to digital assets? And you most certainly can. And on the right side here is just a flavor of the types of stuff that we've looked at in the past few months, really, classic things like Bollinger Bands, moving averages, volatility. I'm looking at targets based on technical analysis, and all this technical analysis influences our entry and exits, certainly, and how we allocate and rebalance. And then if we look at the current technical outlook, again, just sort of briefly going through what happened in 2022, we have the Fed raising rates, we have inflation sort of running super hot. And on top of all that, obviously, we have this massive deleveraging event that we as a company avoided. We avoided, the Terra Luna stuff, we avoided 3AC, BlockFi, Voyager, the list goes on and on and on. And finally, towards the end of that, tail end of that, FTX, of course, as everyone well knows, was revealed to be insolvent. And really it came at that time, shortly after that, where we finally felt comfortable finally adding risk back to these products. Because at that point, we had felt that much of this deleveraging had been out of the system. And we were starting to see, on the right side here, again, I'm sort of listing off what we were seeing on a week-to-week basis on technicals. And again, these technicals applied pretty well, and they historically have applied very well to Bitcoin. And that's helping inform us to add risk here. The whole point of this risk managed process is to allow us to step aside, move into cash when there are, instances of event-driven price action or risks, tailwind risks that are coming potentially, regulatory risks that are upcoming, for example, and allowed us to remove risk most recently. But technicals definitely play a massive part in our decision-making process. And then just to give you a flavor of what the current portfolios look like, for the most part here is just 50-50 in the current schematic here. And just highlighting the diversified digital section again, we kind of view this as, a risk ramp, the least risky of the three, certainly being the Bitcoin SMA. And we start to get into, more risk when we add more digital asset offerings, let's say. And again, those values here are influenced by fundamentals, on-chain activity, development, news, events, that sort of thing. And then lastly, I just wanted to mention, if we look at in a vacuum, why even bother touching these alternative coins as they're known, if it's so risky, if there's high volatility here, right? In a vacuum, if we look at the 2021 performance, there was certainly extreme beta here, extreme overperformance of certain altcoins relative to even Bitcoin and Ethereum. And then obviously in 2022, the same is definitely applicable on the downside. So again, how you position that risk management and navigate through a variety of coins, knowing that historically, this is what has happened in times of bull markets and bear markets. Super important. And I'll pass it off to Bill here just to mention ways in which this could fit into a portfolio. You got to mute there, Bill.
Sorry about that, guys. This is just a simple exercise of looking at how Bitcoin and other crypto assets can fit into a traditional 60-40 portfolio. The 60 obviously being the equities and 40 being fixed income. Here is just a simple graph out about almost 5 years now. We added about a percentage of Bitcoin to the allocation. So in this case, we had a nice table of one Bitcoin, 1% Bitcoin out to 10% Bitcoin. And what we wanted to see over this historical perspective, to see what performance contribution was added from Bitcoin or negative actually, but we wanted to see what was added. And what we found out that Bitcoin allowed a little more flexibility in terms of getting that risk appetite that had a little more juice in it. I coming from a fixed income background as well as Stephen, probably compare this over to high yield bonds, maybe lower rated bonds, maybe double B or single B, high yield, or even kind of bank loan type returns, where we saw, these yielding assets probably saw right now. I mean, actually, these portfolios of high yield bonds are kind of coming in at like about 6 to 8%. So with this, it provided us a graphical way of seeing what was the added value in Bitcoin. Just to the next one, Josh, really quick. So here, this is actually from the beginning of 2018 to just about a couple weeks ago. We see the traditional, and the main column that I'm focused on is just the annualized return. So the 60-40 portfolio provided almost a 6% return, but obviously due to the 10% Bitcoin, it added almost 5% extra of diversification. This was a little better in terms of if we looked at back, just strictly back to like 2021 when we first started this. Obviously 2021 was kind of a unique year where everything kind of moved up, including Bitcoin. And then 2022 happened and it kind of brought it down. Josh, I don't think do we have another slide on the next one? Yeah, this kind of shows us, we really wanted to see what 2022 in a negative year and it was actually unique where the 60-40 portfolio came down as well. And there was probably as everyone knows, there was no safe place to put your cash. But here we saw a 60-40 portfolio, and again, the same tiered allocation of Bitcoin applied from 1% to 2%. I mean, I'm sorry, down to 10%. And Josh, really quick. And as you can see in a down market, and in 60-40%, the 60-40 obviously had 10, but you can see the diversification over to Bitcoin really just didn't dampen these performance numbers that much. Here is down 2%. And almost, about 2%. And with that kind of diversification, we were pretty happy to see that Bitcoin, not only mirrored traditional markets, which we were kind of expecting, but with probably some decoupling moments here and there. But we were also excited that there wasn't that much detriment in terms of Bitcoin. It followed traditional markets. And there was, obviously, we wanted to see we wanted to see better upside, which we did get to see in terms of the previous table.
Great. Thanks, Bill. And just to wrap it up here, as far as where are our options here to actually utilize these products for you as an RIA, we aren't necessarily beholden to any one service provider here, but just to quickly go over the three that we are currently involved with, Bitria uses custodian Gemini, founded in 2017. BitGo uses BitGo Custody for their wealth management product, founded in 2013, and OnRamp, founded in 2018, uses actually multiple custodians, one example being Coinbase. So each of these has their advantages and maybe disadvantages from an RA perspective as far as the TAMP and reporting options, and we're happy to go into that. And as far individually with you, if you're interested in these products, obviously. And as far as fees, again, there's some variability there, and our management fees are listed there. So I think that's all we have in the presentation for today. And if we have any questions, we'll turn it over to the audience here.
There were 3 questions that we got sent in the chat. Are you guys able to see them, or I can read them off, whatever you guys prefer?
I can see them, and let's take a look here.
Yeah, please read them off, Shannon.
Sure. So do you have the ability to go off chain and invest the USD into treasuries?
So this is definitely a super common question, especially coming into, what the yields are for treasuries. We don't currently have that ability that I know of, but it's definitely something that we're pushing for. And we're just broadly digital asset wise, we're starting to see more and more connectivity to what are called real world assets in the digital asset world. So although this may not be available immediately, I do think this is eventually coming in the horizon for sure.
Not off the bat. Thanks,
Not off the
Josh.
bat though, yeah.
Yep. Next, are you farming with any of the positions?
So we're not currently farming with any of the positions. We do have the ability to stake positions dependent on the platform we use. I know BitGo has that ability. So should we have an allocation in a stakeable token that we were confident in for a sustained period of time, that it would make sense to do that, that's where we do it.
The next question kind of goes with that. You mentioned running a Polkadot node. I'm curious if you run any others or utilizing any staking protocols for additional income. You basically answered that.
Yeah, I mean, I'll answer that a little bit further though. Within the SMAs, we do not do this. We don't stake the tokens to any nodes. In another part of our business that runs the trust, or I should say another part of our business that actually runs nodes, we do have a technology platform that runs various nodes, and our trusts do stake to those nodes, and those are single token trusts that we run.
Thanks, Stephen. And lastly, minimums for the SMAs.
Guess I'll answer that. I believe it's currently limited to accredited investors, I believe, and 25,000 was the minimum we currently have. But happy to talk about that further.
Yes, we're flexible with minimums, and we want to create relationships with our investors. So we're happy to set up individual calls, one-on-ones, where we can answer further questions about your specific situation, or for those of you that are financial advisors, talk about how to incorporate this into your clients. For anyone on the call that's a client themselves that wants to connect us with their financial advisors, we've also been taking those calls. Those are all the questions that we have for right now. I'll give everyone like one more minute in case there's anything additional that anyone wants to ask. And I'll ask our panelists if they have anything else to add. Okay. If not, thank you, Josh, Bill, Stephen, and Sean for the wonderful presentation. Thank you to all of our registrants for joining us today. We will be following up with a recording of the webinar today, as well as posting it on our website to continue to be a resource. And we are here ourselves to be a resource to you guys as you continue to navigate the space. So please don't ever hesitate to reach out to me or anyone on this call, anyone on our website with any questions. And we look forward to seeing you all again soon. Thanks, guys.
Thanks, everybody.
Thanks, everyone.